indicators is all you need. Trading is hard. Don't make it more difficult than it needs to be. I've been day trading for 10 years, and I'm about to save you years of education in this one short video. I'll give you the 2 indicators now, and then we'll dive into the specifics on how to use each one. The indicators are the simple moving average and the relative strength index. Indicators are tools. They are equations that help us to quantify the ideas that we have in our head. Both the simple moving average and the relative strength index help to deliver to us the current momentum, direction, and trend of a ticker. The simple moving average helps us determine that by the stock either trading above or below the line, obviously above being bullish, momentum, direction, and trend, below being bearish. And the relative strength index helps us do the same by either being high, bullish, or low, bearish. And there's also 2 major schools of thought when it comes to trading strategies. There is continuation, and then there's reversal trading. In this intraday setup that we have on the chart here, if you were looking for a continuation trading strategy, you likely would have entered at the close of this candle because it's trading up and above the moving average and the relative strength index is up and above 70. Whereas if I turn on my reversal trading workspace here, you will see that it is still making use of a simple moving average and a relative strength index, except now the relative strength index must be low. So there's multiple different ways we can go about making use of these indicators to really achieve any of your trading goals. Free Thinkorswim codes. Sorry, I had to get your attention, but for real, click the link in the description down below this video to go access completely free codes. I don't want your credit card. I don't want your email. They truly are free. Anyway, let's continue with this video. Now let's talk setup and let's start with the simple moving average. So for intraday charts, for day trading, and specifically for day trading low float volatile names like the one we're charting here, I like the default length of 9 on our simple moving average. So this is measuring the average closing price over the last 9 candles. The larger this number is, the slower this line will react to the price movement. So if we're trading something very volatile, I want this moving average line to be reacting pretty quickly to price changes. And honestly, look at this great live example for how well this length is working on a volatile name like this. You could have bought this stock anywhere above this line and done a-okay and ignored looking for long opportunities once it gets below this line. And you can even see it struggling to get back over it here recently. Now, if I were to use the simple moving average in swing trading, which if I turn my reversal swing trading workspace back on, you will see that happening here on ticker XYZ, I go out to the 200 length simple moving average. So it's the average closing price over the last 200 candles. You'll notice now the moving average line reacts much slower to the price movements of the underlying ticker, but it's giving you the larger picture momentum. And in my strategies, in my bullish strategies at least, I will only look for longs above this line, and I will ignore trying to play any reversal type dips if we are below this line to help myself avoid catching falling knives. And setup for the RSI as it pertains to day trading, once again, is extremely simple. I like to keep things as simple as possible. If they work, they work. Listen, the people that built these equations are way freaking smarter than both you and I are combined. So you may as well, if you can, leave them as default as possible. So for the RSI, once again, if we're day trading volatile stocks, I don't touch anything. Length can stay on 14, overbought can be 70, oversold can be 30. However, once again, I do make a slight little hinge if we bounce back out to my swing trading reversal strategy. You will note that with this strategy, and actually I haven't changed it on my RSI itself, but for this strategy, I do use the RSI as my reason for enter and as my reason for sell, and I set that up as 40 being oversold rather than 30 and 60 being overbought rather than 70. So for my swing trading of less volatile stocks, I just tighten up the upper and lower bands on the RSI by 10 points each. All right, now for the most important part of this video, how do I actually make use of these indicators? Well, as sort of already foreshadowed, the simple moving average is more so the larger picture. If we are above the 9 length simple moving average, once again, when day trading these volatile names, I will look for bullish setups. That's really all it is. If we're above this, it's got the green light, it's good to go. I am looking for setups on this thing, be it continuation trades, be it reversal trades, whatever it is, got the green light, ready to go. Once we get down and below this level, once a candle closes below this 9 length simple moving average, I'm no longer looking for trades, right? I'm not trying to buy this dip. The stock is weak. I'm not trying to buy this bounce. The stock is weak. So your simple moving average acts as your checklist. Your sort of, should I look for setups or should I not look for setups? And the relative strength index is essentially the same idea, except more so with what is currently happening with the ticker. So the simple moving average tells a larger picture, and then I use the relative strength index to get that momentum, direction, and trend now. So when we are above the simple moving average, we are good to go, good to look for setups. When we break above 70 on the RSI for the first time that happens here on this candle, this could be a potential good spot to enter for continuation because we meet the initial checklist. We're above the simple moving average, and then we have a very strong relative strength index. So a lot of beginner traders get taught the relative strength index the other way. And it's not that the other way doesn't work or is impossible to work, but basically they are saying, hey, if you're overbought, you shouldn't be buying this thing because it's too stretched. I'll tell you something. I hate the word stretched when used in the stock market, when used in active stock market participation. I think too many beginner traders try to apply physics to stock charts. Guys, there's no gravity in stock charts. Just because a stock is up a lot doesn't mean it's going to come back down. When you're looking at trend and direction and momentum on a ticker, it's actually more likely than not going to continue in the same direction in the short term. Now, that might not be true if you're looking at like a larger picture. Like if you wanted to try to buy this thing and hold on to it all day or even for a week, maybe chasing it up here above 50 cents or whatever this is, wouldn't be a great idea. But we are actively day trading here. This is a video about day trading. So getting in and out of this thing relatively quickly when you get this sort of initial move, when it's moving up large. Even like, so this is what this chart looks like at the time I drew the arrow. This is what the chart looks like. So many beginner traders are going to avoid this. This thing is currently trading at highs. It's blasting off. Its RSI is over 70. This thing is super stretched to the upside. Why would I ever chase this thing up here? I'll just wait for the dip or whatever it is that beginner traders say. And of course, they end up missing out on a pretty massive move. I mean, the stock goes up over 50% in the next 40 minutes from where this RSI initially breaks over 70. So that long rant to explain the short reason of how I use the RSI for my continuation. And then, of course, you can use it for reversals as well. Of course, in this trade, the RSI never really has a chance to like get super low before we break down below our moving average, which, of course, once this happens, all longs are off. I'm not looking for longs at all below the moving average. But you do get a candle here in which the RSI goes from 83 down to 67. I like that. That's another kind of different way that I use the relative strength index study. Instead of just worrying about the value of the RSI, so like on this candle it's 83 and on this candle it's 67, I like to use the difference in two candles. So instead of like worrying about it being 83 or 67, I can go, okay, it was 83, now it's 67. That is a 16-point drop in the RSI. That is a large drop. So maybe if this thing is still above the moving average, which it is, and you get a drop over 10 or whatever it is, I'm not telling you what to do. I'm just giving you ideas, right? We're not building a trade strategy in this video. If you're interested in codified trading strategies, of course, make sure you subscribe to this YouTube channel. It's kind of what we do. But this video is just to help give you the ideas for the indicator. But anyway, say you get a drop over 10 in the RSI between two candles and you're above the moving average. Maybe that's what you look for in a reversal setup. So that's even another way you can go about making use of the RSI. Once again, being rate of change rather than absolute value. If you're interested in accessing custom thinkorswim codes over on my website, daytradingstrategies.net, I have published over 150 custom studies, scanners, strategies, etc. Of course, earlier in this video, I yelled at you about going over there and checking out the free codes. I just want to also bring up one more thing. Of course, I do have my service set up as a membership because I am always, every single week, adding new codes to this website. Obviously, you can sign up for the monthly plan. You can cancel it anytime with just 3 mouse clicks under this My Account tab. Also, there is an annual plan. With the annual plan, obviously, you're going to save yourself some money over the next 12 months of access to all these codes. But more importantly, with the annual plan and with the annual plan only, you get lifetime access to the official daytradingstrategies.net Discord server. There are 913 members in this Discord server. That's a lot of people that have signed up for the annual plan. It's a lot of eyes on the stock market, always talking about what stocks are moving. We talked about that stock WORX, which is the one we've been charting all day today. That was brought up in the Discord as soon as the move started. So if you missed that huge penny stock 70, 80% gain this morning, you wouldn't have if you were in the Discord. I honestly, truly believe the fastest way to become a better trader is to join a community of like-minded traders, which is why I created this Discord server. Everyone in here is using the same codes you'll be using. They are sharing what they find to be successful. They are even sharing new code ideas. A lot of times it really is just a great place to be and a great additional community to become a part of, alongside getting access to all of the 150 plus codes. So head on over to daytradingstrategies.net. There will be a link in the description down below this video. Listen, at least go take advantage of the free codes. They really are truly free. There's even a quick 1-minute video tutorial on this page so you can learn how easy it is to import the codes from my website. While you're over there, read the reviews, help decide for yourself if this is something that could help accelerate your personal trading journey. Sign up today and become a better trader immediately.